Welcome back. We're taking a look at our markets. We'll start with our local markets. Currently, we see that the all-share index is trading in positive territory. It's up 0.6%, trading at 84,109 index points. On the currency front, we see that the local currency is trading at 18.55 against the US dollar, 19.32 vis-a-vis the euro, and 22.86 against the British pound. On the commodity front, gold is trading at $2,747 an ounce, while platinum is trading at $945 an ounce, and Brent crude oil is trading at $78.26 a barrel. Now we're going to be looking at the Asian markets. They were mostly up on Thursday, driven by a positive run up on Wall Street after President Donald Trump made an announcement about huge investment in artificial intelligence. Chinese stocks were driven by a fresh batch of measures aimed at boosting the country's stock markets as part of Beijing's moves to lend further support to the faltering economy. The Nikkei share average rose by 0.8%, while the Hang Seng Index declined by 0.42%, and the Shanghai Composite Index ended the session just over 0.5% up. US markets broadly advanced on the back of Donald Trump's announcement to invest to enhance artificial intelligence infrastructure, as well as strong quarterly financial results from Netflix. As a result, the S&P 500 hit an all-time high. The Dow Jones Industrial Average rose by 0.33%. The S&P 500 ended the session up 0.61%, while the tech-heavy Nasdaq closed up 1.28%. Well, to discuss the markets further, I'm joined by James Turp. He's the head of investment strategy and portfolio manager at Sanlam Investments. Thank you very much, James, for joining us. So, of course, the big deal right now in the markets is this investment that's been announced by Donald Trump to the tune of $500 billion to enhance the infrastructure of artificial intelligence. What do you understand by that?
Thanks, Nompu. Yeah, I mean, that's not an insignificant sum of money. Just to have the interest on that for a couple of days would be useful. But it's a big investment in this tech sector with artificial intelligence, the focus of this new digital age that we're in at the moment. So it's a big step. And of course, we know in the US equity market, the proportion and the size of these tech companies is massive. So it's a clear indication of where they're hoping to go economically in the future. Very encouraging steps for the US economy.
So if you recall, James, during President Trump's last tenure, it was crazy because every time we talked about markets, it seemed to always be reference to what Donald Trump's saying, you know, what he says, what he does. Do you expect more of the same, over the next coming 4 years, that everything is driven by Donald Trump and then we forget about important things like monetary policy?
That's a good question. I mean, what he did prove is he's a master of social media and advertising throughout his career, getting the Trump brand out there. And you're right, during his previous presidency, headline risk was at an extreme, market-moving noises coming out. And I think we could expect more of the same. We're just getting into it at the moment, and all eyes are on this tariff news and how's that going to affect global growth, US inflation, then feeding through to global inflation. All of these balls in the air at the moment, and putting the US back on the map, in control of that global narrative, is obviously a priority for the new president over there. So yeah, I expect to see a lot of headline risk over the next 4 or so years.
So locally, yesterday, during this time, at around 1 o'clock, Stats SA released data on retail sales for the month of November. That will have been the Black Friday month. And they were quite impressive, up nearly 8% year on year for November. My question is, do you expect the consumer to remain resilient, at least in the first quarter and beyond that?
Excellent. Yeah, I mean, so we were discussing this earlier, and of course, Black Friday is attributable to it, but it's remarkably higher than last Black Friday. Why would that be? You would think, the consumer would be perhaps a little less in less good position this year. So we've looking further at it. They're thinking maybe it's this two-pot money that we know people have drawn down on a portion of their pension money as we've changed to this two-pot system. And perhaps some of that we know has gone to pay down debt, but also perhaps taking advantage of those November specials that come in the form of Black Friday. So the question, how's the consumer shaping up? Well, the consumer confidence figures seem to be improving somewhat. Of course, inflation's a lot lower. 3% for the last year-on-year inflation we saw yesterday. So in this environment of lower inflation, with some cash coming out of this two-pot and washing around in the system, consumer a little bit more confident perhaps going forward. Also, these political developments create this air of optimism too, since the creation of the government of national unity. So there's a lot, I guess, for the consumer to be more positive about going forward.
Yeah, given your expertise in the area of fixed income, I can't let you go without asking you about your expectation in terms of the interest rate decision that the Reserve Bank will take at the end of this month. What's your expectation and why?
So at the moment, just looking at what's being priced, by my estimations, it's almost fully pricing an interest rate cut now in the derivatives market if we consider where we were at the time of the last MPC monetary policy meeting. So it looks like we'll be cutting rates. We've got space to do it. We've only cut 50 compared to the US economy that's already cut 100 basis points. So next week, Wednesday, the US Federal Open Market Committee will decide on their interest rates. Now, they're not expected to cut, but because they're ahead of the game with that 100-point cut in the system already, we think with this improved inflation figure that came out, with the currency that it's a little bit stronger, the odds are that the SARB could well cut rates. And I think if they don't, the market will now be disappointed. It seems to be pricing in a cut now in our market.
All right. Thank you so much, James, for your time and insights. As always, James Turpie is the Head of Investment Strategy and Portfolio Manager at Sanlam Investments.